Do you have any idea where the current foreclosure capital of the United States is? If you follow this channel, you probably are thinking somewhere in Texas or Florida, and you would be right. Specifically, you're probably saying Florida. Again, you would be right. But let's talk about where the foreclosure capital of the world is, and then dig a little bit deeper to understand just how bad is it. So the foreclosure capital of the United States as of the end of the quarter is Lakeland, Florida. Lakeland, Florida is the foreclosure capital of the U.S. with 1 out of every 172 homes receiving a foreclosure notice. Now, this doesn't mean they're actually in foreclosure. It means they've gotten at least one foreclosure notice. I should say they are in foreclosure, but they haven't been foreclosed, is what I should have said. But one of the things that I always ask myself is, hey, okay, great. 1 out of every 172 homes. I'm like, sounds bad, sounds horrible. But I always want to go one level deeper. So I go out and I do a quick Google search of Lakeland, Florida. And according to Google, Lakeland has 54,000 single-family homes. Okay, 54,000 homes. Okay, great. Now I take 1 divided by 172, which I think is like 0.05 or some percent. And I multiply that by 54,000 because I don't care that there's 1 out of 172 homes are in foreclosure. I want to know how many homes, an absolute number, have received a foreclosure notice. So if you do the math, 1 divided by 172 times 54,000, you get a whopping, get this, 314 homes. 314 homes in Lakeland, Florida have received some type of foreclosure notice. Now, again, 1 out of 172 sounds scary, but does 314 sound scary? I don't know. That's for you to decide. But that was something I thought was very, very interesting. It is Sunday. It is Father's Day. Let's not forget it is Father's Day out there. If you are a father, a dad, stepdad, whatever it is, if you've done the job, if you've done the work, happy Father's Day to each and every one of you. Happy Father's Day. So I want to actually go on a quick rant before we get into the week ahead and other important numbers. I was out with real estate agents in Vegas over the weekend, and I just want to say, I don't know if this is true in your markets, but a lot of you real estate agents are soft and you're just whiny. Now, I understand that transactions are down. I understand it's harder than 2 years ago, but it's never supposed to be as easy as it was in 2022. So the fact that you're whining right now tells me that you're soft. So after listening to multiple agents, specifically buyer's agents, but I got heat for listing agents too. You buyer's agents are just whiny little bitches. Oh, my buyer did this, my buyer did that. We saw 17 homes and then they're pulled out. They're uncertain. They're nervous. They're this, they're that, they're this, they're that. And I listened to this for a little while and I finally had enough. And I said, guys, I told you that this year is going to suck. It's going to be the hardest year on record for real estate agents. But if you get your head out of your ass, you can actually crush it in this market. And they're like, okay, what do you mean? Well, I'm like, let me take your buyer as an example. Okay, great. So your buyer has identified what townhouse or condo community they want to live in, right? Yes, they have. The condo community has 412 properties. Any one time there's 3 or 4 that are listed. That's where they want to live. That's where their friends are, yada, yada, yada. I'm like, great. What's going on? Well, we were getting pretty close on some, but, then they backed out and, they didn't want to do anymore and they're going to wait till next year. I'm like, oh, really? Okay, great. Well, how many listings are there in that community now? Oh, it's exploding. It usually is only 3 or 4 the last couple of years. Now there's 17. I'm like, interesting. Interesting. So there's 17 and there used to be 4, and you're whining. I'm like, he's like, yeah, what do you mean? I'm like, okay, dude, you just don't freaking get it. What your seller has told you is they have a buy box, right? They've told you where they want to live. Now you're telling me that inventory is up 400%, right? You've gone from 4 to 17. It's up 400%. And you're sitting here going, I don't know what to do. Well, Mr. or Mrs. Lazy Buyer's Agent, I suggest you do the following. You call up your buyer and say, great news. The condo community you want to live in is having a, I don't know, having a sale or having whatever. I want to do something crazy with you if you're comfortable doing this. I want to write 5 offers on 5 different listings. And we're going to write crazy offers. I mean, like 20, 25, 30% off. Now, I don't expect us to get any of these offers, but you know what we're going to do, Mr. or Mrs. Buyer, is we're going to find out who is motivated. So here's the deal. I need commitment from you, Mr. Buyer, that if we somehow find a extremely motivated seller, get a massive discount today of at least, pick a number, 15, 20%, whatever you want it to be, that you're going to move forward. Are you okay with that? And then, oh, by the way, in the offers on the, I don't know, comment section, tell every listing agent and seller that you have made 5 offers on 5 different properties, list the addresses, and say, we are going to take the first one that says yes. Be completely above board. Now, again, you're going to have to write lots of offers. I'm sorry, do your job. And you're going to have to do a lot of communications and counters. I'm sorry, do your job. But if you want to make it rain and you want to support your buyers, do your freaking job. Get them the best offer that is possible. So again, you are lucky. You have a buy box. You can go hunting. You can find motivated sellers. All I got to tell you is stop whining and start writing offers. Now, let me go to the listing agents. Listing agents, you don't escape either. Lots of viewers telling me listings are staying longer, days on market, open houses, all of this thing is not happening. Again, you're being soft. You're being whiny. Instead, communicate with your sellers. Tell them what is going on. And if they still have to sell, educate them that they can attract more offers by offering some type of seller financing, offer rate buy downs, do what is required to stand out from the crowd. In fact, if you are a listing agent, you should be educating your sellers on the fact that you know how home buyers are selling or home builders are selling today. They're selling on payment, not on price. So you as a seller, you can do the same thing. You need to have deeper and longer conversations. This is a hard market. Most real estate agents, most mortgage brokers are going to quit or go broke. A few of you will look into the noise, look into the void, and you will crush it because you will do what no one else does. You will find the motivated sellers for your buyers. You will write lots of offers. You will have a machine follow up every week until the property is sold or taken off the market. This is the time to have fun. This is the time to get creative. This is the time to create a name. If you can crush it in a market sub 4 million existing home sales, you are going to crush it in 26, in 27, in 28, where most people are working at Starbucks. All right, rant over. Stop being soft. Do your freaking job. All right, next up, let's talk about the economic data that is coming fast and heavy next week. We've got manufacturing survey. I think it's the Empire Manufacturing Survey in New York on Monday. We got retail sales and home builder confidence Tuesday. Housing starts, and of course, the Fed decision, and most importantly, the press conference on Wednesday. Thursday is a national holiday for Juneteenth, and Friday will be U.S. Leading economic indicators. I'd be remiss if we don't talk about what is going on between Israel and Iran. It is, as of this morning, maybe one could hope calming down, because if it doesn't calm down, folks, we could have a problem. What do I mean? If you weren't paying attention on Friday, oil shot up 8%. There is talk about oil going over $100 a barrel if this continues. I think Iran produces something like 3 million barrels of oil, so quite a bit. So again, could be a real problem. Interestingly enough, the 10-year note ripped higher, right? The rate went up. Usually speaking, the 10-year treasury is seen as a flight to safety in times of war or escalation. Not this time. Is this just a gut reaction to rising oil prices? Don't know. We'll find out in a little bit when we talk to Dan Bird in our school community. We're going to definitely look at oil and rates. Gold shot up $50, and looked like Bitcoin, I think, fell $2,000. These numbers are all from Friday. I did not check this morning. So again, it's something we need to watch for. We need to hope this calms down, because if it doesn't, oil over $100 would, without question, be extremely inflationary. So something to pay attention to. Talking about school, we had a bunch of people sign up, and I got a special offer for you. School, Patrick, Rodney, Ethan, Isaac, Kyle, and Johnny. Thank you all for joining school. We are currently at 389 members of school. I want to do something when we cross 400. When we cross 400, so 11 more folks joining, I will add as a free giveaway in school the Las Vegas replay. If you didn't attend the Vegas event last year, you could go buy it for $50, but instead, once we get to 400, I will add the ORaaT replay for free consumption inside the school community, just to say thank you for getting to 400. And just because I'm here, when we get to 500, so when we get to 500 school members, I'm actually going to load my $100 course called Get Your Money Right. So again, as the school community grows and grows, I want to keep adding more and more value, and that is going to be free education and whatnot. You can, of course, buy it today. It's $99, or when we get to 500, I'll load it for free. But again, we're 11 away from joining the 400 club, and I will add the Vegas replay. Friday, we did get the consumer sentiment, and as expected, it rebounded in a big way. It went up almost 16% in a month. This goes back to my notion that the consumer and uncertainty is clearing and consumers are feeling better. Last month we were at 52.2, which I think was the second lowest recording. It was expected only to increase to 53.6. It screamed higher all the way to 60.5. Again, up almost 16% in a month. Was a great report. Bank of America says no rate cuts in 25, but you can get 4 in 2026. Looks like the job market is getting a little squishy. Layoff announcements through Friday were 696,309, up 80% year on year. A lot more layoff notices. The market currently is pricing in 2 rate cuts, September and December. We'll see what happens with oil if that continues. Redfin out saying that the typical house is selling for a 7% discount. Yes, folks, 7%. Buyers, please negotiate hard. Buyers agents, please negotiate hard. Get seller credits. Don't pay list price. It is interesting to note, according to Redfin, that still 28%, so 1 out of 4, 28% of homes are still selling for over asking. This probably goes very much in the Northeast, where it still seems to be a seller's market, where much of the country is a buyer's market. And then finally, folks, I want to leave with a notion from Coach Carson, the wonderful Coach Carson. He's out with a concept that I fully support, and that is you want to become a time billionaire. Something I'll be doing with Coach Carson the next time we talk is I'm going to have him go deeper on exactly what a time billionaire is. All right, folks, that is the daily financial news. We will be live tomorrow at 7:30 a.m. Come join us. Also, don't forget the Zuber letter. It is a collaboration between Resi Club and I, where once a week we talk about a hot topic and we put it out there for free. You can get it. You can go back and get past issues just by going to zuberletter.com. Again, all of the material at zuberletter.com is free. Again, it's all about education, support, opportunity, and just having some fun. Take care. Have a great day. I will see you in school. Later.